Mark Selby, Chair and CEO of Canada Nickel. Very glad to be here with Matthew Gordon.
How are you?
Excellent. It's nice to be in person after 2 years.
I didn't realize you had legs. Because I just keep seeing you on Zoom every week. But here you are.
There we are.
Have you been also traveling around Europe though?
Yeah, I was in Prague for International Ferroalloys Conference. It normally is 1,000 plus people in person because it's the trading season where everyone negotiates their contracts for the upcoming year. So there's still 450 people. So it's a little first big in-person event since the pandemic started. But no, I think they did a great job actually managing it as a hybrid event.
Yeah.
And again, with these things, there's always, if you have 500 people inside, there's 500 people in the lobby who don't want to pay to come into the conference, but are there to do all the networking. So so for me, it's always good. It's a really great way to get a view on how the nickel market is physically acting. So it was very, 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 very useful. A couple days, then I stopped in Switzerland to see some potential strategic investors, and then came here for the one-to-one conference Wednesday and Thursday. So.
And then you're off somewhere else after this?
I'm here. I'm taking advantage of being in London. There's a lot of different people and different parts of the business that you can talk to. So I'm here through Tuesday. So.
Oh, fantastic. Okay, well that's good news. Okay, you've also been at the one-to-one conference. Slightly different profile from some of these events that you've been to before you got here. What was the kind of mood of the nation there?
Oh no, it was good. I mean, again, the best part about from past life advancing the nickel project in a decade where nobody cared about nickel. Now 100% of all investors that we talk to are extremely keen on nickel and are looking for ways to get new exposure to it. So. And again, the fact that we've only been around for 2 years, we're finding investors who haven't heard of us yet. So
that's insane.
When the light goes on and go, oh my God, that's it's great.
And the big boys are taking notice of you now because you kind of got that scale about you. Is that more? I mean, what are they trying to get out of a conversation with you?
Well, the key, I mean, as we said, publicly, look to have a strategic investor in place by year end. And again, the reality is there's very few new nickel sulphide projects. We watch BHP and Wyloo duke it out over Noront, and they still need to get a road in there, which will take better part of a decade before they can even start to really do any significant development. We saw a couple weeks ago, Sibanye took out Santa Rita for $1 billion. That's a 14,000 ton a year nickel producer. Good mine life over 30 years, but we'll be ramping up to 42,000 tons a day. So that having those benchmarks in the market are excellent for us.
You're trying to say that you're a growth story.
We are a growth story. Yes.
Fantastic. Well, I'm sure we're going to talk about that over the next few weeks and months as well. Because obviously you kind of signposted some of the things you want to try and do. You've also had some recent announcements, not too bad. I think markets reacted reasonably well to those.
Yeah, no, for sure. I mean, the big one was around the carbon footprint.
Oh, what are these?
You've got some show and tell because again, there's a lot of. I mean, sadly now when you see a big shift in anything, people all of a sudden, the term zero carbon or low carbon or net, start to get really bastardized in terms of and. We've been focused on this from day one, and it's extremely substantive. We've measured what our carbon footprint is going to be out of the PEA. And then the real exciting thing, and why we think these types of nickel deposits are going to be the next generation of nickel supply, is the fact that when these rocks are exposed to air, they spontaneously absorb CO2. And the fact that we're going to be grinding them up into lots of fine particles and spreading them over giant tailings facilities, that they have a massive capacity to do it. And just again, a real world example in Iceland, there's a company called Carbfix that's putting CO2 into a cocktail and injecting that cocktail, into the ground in situ to capture the carbon, and they're getting ridiculous prices for the carbon credits. But just to show you, sort of, just how spontaneous it is, I've got 2 samples here. So you've got this is our core from a month ago from the
hold it up for the
65 camera. So and then this is core from just a year ago. It's just been sitting outside, and this white coating over top of everything, and you can see how we cracked the core open there and it's still fairly dark, is that is magnesium carbonate mineral. So that's this mineral that said I like to soak up some CO2 and becomes this new mineral called magnesite. And again, it happens spontaneously.
So how much carbon's in that then?
Right now, there'd be a few grams of that. So what we're targeting with the project is, we know we need to get 4.6 kilos of CO2 captured per ton of tailings to get to zero. So the nice thing, and this was the press release from last week, was done some lab scale work. It is lab scale, but it showed that we have the potential to capture up to 17 kilos of carbon per ton of tailings. So anything above that 4.6 number, becomes potential carbon credits.
So 4.6 covers your entire project.
Yeah.
So you're zero carbon.
Yeah. In a very real, measurable, demonstrable way that's not, hemp plants or this or that.
Right.
That other people are floating around. So.
Well, yeah, we spoke to a few this week.
Yeah.
Okay, so you're completely covered, and then you get to sell these things in what's going to become a sort of heavily traded commodity going forward.
Yeah.
Revenue stream.
Yeah. Oh, no, I mean, in Canada, the current government has a stated carbon price of $130 a ton in 2030.
Wow.
So, yeah.
So I assume you were starting to do some numbers about what the potential is for you guys, and have you announced that?
Every kilo, that we're able to achieve, and again, 17 is, when you're depositing tens of millions of tons, it'll be a little different than a lab scale.
Yeah.
But, we think we'll probably be able to get, in the range of, 8 to 10, from at this point, based on the information we have. It seems like a reasonable place to be able to get to. Yeah, and every kilo that we get is basically 900,000 tons of carbon over the life of the mine. So, if you multiply that by 100, you start getting,
dollars,
nice. Right? So, which is great.
That's a business.
Yeah.
Do you spin that business out?
Well, I mean, it becomes, we'll
or
see.
Or does it fund the work you want to do?
At the right time, given the carbon is still relatively in its infancy, I think it's going to be a very exciting potential revenue stream, 5-10 years from now, when you've got this very demonstrable, very permanent, CO2 capture.
It's kind of interesting. It's kind of like free money in a way, because it's always done that.
Yes.
Right?
Yeah.
It's just obviously working into this new narrative that's around out there. You've said, actually, let's have a think about that. I think we've got some free money, guys.
Yeah.
Let's go get it.
No, most tailings ponds become a lifetime liability.
Yeah.
This will actually be a lifetime asset.
Yeah.
Which is amazing.
180%.
Yeah. I'm not sure what you can discount 1,000 years worth of CO2 credits.
Okay, so that's fantastic news there. And so there's other rock samples there. They're just versions of the same thing, are they?
Yeah. Well, again, just to sort of demonstrate how this mechanism works. This is there are places in the ore body where fluids that had CO2 in them went through and converted. This rock is about 30% magnesite. That's been done in situ. Now that's under pressure and temperature and stuff to make that happen. But again, to make it very clear, this is an extremely real mechanism that happens.
Yeah. And
we just need to find a way to create the maximum amount of exposure to CO2 for all our tailings and waste rock over time.
Zero carbon. So what are you calling this now? You got to label it.
Oh, this is, well, I think, in the end, given the focus on carbon reduction, this is white gold. So
white gold.
White gold on
white
the
gold
there. So
zero carbon and white gold. Yeah. Look out for those names the next year, folks.
Exactly, trademark coming soon.
TM. Look, okay, back to the project. Obviously, we talked about obviously the scale of this project. It's big, and you think that there are lots of opportunities up and around the same area.
Yeah.
Which is going to be good. Do you think we can see more entrants coming in? Are there going to be more people wanting to tell this story, or start looking at their balance sheet slightly different, or potential balance sheet, given what you're saying here technically?
Well, we're already starting to see some sort of Closeology plays pop up in the area, which is always, is a form of flattery, which is great.
Yeah.
But again, we think we've unlocked the sort of the underlying geology that there is why these nickel deposits are there, and we think there's the potential for a bunch more in the area. We closed the deal to pick up the other 5 properties, but we think that in the broader Timmins region, and so we're working along that path. So I'd say stay tuned on that front in terms of news.
Okay, interesting. And that's when the big boys really will get interested in you, because we've always talked to the story about. You need multi-decade or multi-generational size assets for those guys to kind of step in, but you want to retain as much control for as long as possible. Does this in any way help you get cheaper money?
Oh, for sure. We made some key additions to our board a year and a half ago. To really be able to be in a position to tap into those, because again, there's vast pools of capital. That are focused on green. So. being able to have, what people don't realize, that people always focus on operating costs, capital costs, and so forth. But for mining, sort of that overall financing cost, is a pretty substantial number. So if there's ways to reduce your cost of capital, it's a huge advantage, and this will definitely help us play in that space.
Because there's a few things which are changing. Innovation. I think you've always cried out for innovation in mining, right? Okay, we've had this conversation a few times, and the financing hasn't really changed much. I think the most interesting thing that's happened in financing the last few years is probably royalty and streaming, and that's been around for a long time, right? So, but with things like this, zero carbon, and also ESG, right? The money available for those two labels is huge. The cost of that money is significantly lower, and that's going to help stories evolve and change differently, I think, going forward.
Oh no, I mean, the opportunity between being kind of high carbon or average carbon and being truly zero carbon is multifold. So one, in terms of cost of capital, because there is so much capital coming into the space that's then available, that will then allow you to do so much more as a business. Number two, again, this will happen in the ability of these rocks. It takes a long time to go from a little bit on the surface to being completely carbon, and so those things will continue forever, as long as they have some exposure to water and water containing CO2, they will continue to carbonate. So that creates that CO2 credit, again, is going to be a very valuable credit. And then there's a third pile of additional value that when you look at there will be premiums available for products in the market that are zero carbon, particularly if it's an industry where the average or top end of it is extremely dirty. Macquarie at the LME week, their LME presentations tried to estimate, based on the relative carbon slope of the carbon curves, what kind of premiums might be available post 2025 when the Europeans start to put their input taxes in place. And for nickel, they estimated a $2,000 a ton premium. So that is that's real money. So,
that's real money. The other bit was, as you talk, you've done a lot of innovation in the last year in terms of the way that you've come at this your project, right? I like it, but the bit that you're possibly unlocking, not just for yourselves and other people, is the way that this industry gets financed. There's a few players who are in control, especially when it comes to the juniors, right? And they get to play the game the way that they want to play the game.
Which is really good for them, and
it's really good for them.
Always good for the other shareholders,
right? But you're bringing a new type of money from new players, not just new type of money, but from new players who perhaps wouldn't have considered this space before. Certainly within the net zero initiative, which is what we're seeing here, white gold, which we're seeing here, and I think, that's great. So was that your intent, or was that just an interesting byproduct?
Oh no, it was our intent. We put those two people on the board. You're lost track of time in the thing, but more than a year ago. To be able to have people who have the experience to be able to tap into those alternate pools of capital, because ultimately, when you go to fund your project, that's and as we get into mid next year, that's when those activities really start to gear up. Once the feasibility studies are locked down, and so we want to go in as deep and as hard into those pools of capital as possible.
And you really made me think there, because we've seen lots of deals done by like I say, there's not that many players. It's not a big space, mining, right? Just to remind people, the whole entire mining space is about the size of Apple.
Yes. Exactly.
Okay, let's put it in context, guys.
One tech giant.
Right? Lots of big trucks, but not that much value. So therefore, a few players can manage and control it. With this newer, different types of money, you're going to have massive capital pools wanting to come in here and reap benefit of this, because they can then apply that elsewhere, other sectors, across the board. And that's okay. That's it. I haven't thought of that before. Very clever.
Thank you.
Very clever. And what can we expect to see? We talked by the end of this year. You made a few promises.
We talked about having a strategic investor in place. So that's on track to be in place before Christmas.
Fantastic.
Again, sometimes things happen, but as of right now, it looks like on track for that happening.
Okay.
Again, these districts, huge real district scale opportunity, we think are there, and so stay tuned on that front as we unlock it. And then we've had a great series of announcements in terms of the resource, in terms of the recoveries, and now with the actually some actual carbon data. Again, you're going to continue to see news releases through the coming year around around de-risking the feasibility study and getting more work done and making that as meaty as possible in advance of the feasibility study being released by this time next year.
Right, that's the other big one, but by end of year. Yeah. Okay, and in terms of the strategy, obviously significantly advanced with regards to the conversation with the strategic.
Yeah.
Is it industry strategic or is it financial strategic?
Industry strategic. Right. Again, there's a lot of people who still don't understand large low-grade nickel deposits. Again, it's a mystery to me. There's lots of large low-grade copper deposits, but again, investors struggle when it's something new. And so, having somebody come in, who's in the space and to say, yeah, no, we get large low-grade nickel, and that's why we're putting our money behind this company. So yeah.
And is that one of the first things you expect them to do? Put money in?
Yes.
Right.
Yeah.
Okay.
Yeah. So yeah, no, we've talked about sort of a decent equity stake in the company.
Okay. Good. Okay. Well, we'll look out for that. Good to see you.
Great to see you. Nice to actually shake hands.
Londinium. I know.
It's better than two little square heads.
Well, actually, if I think about it, we did an interview, I think at Mines and Money, and then a few months later we're in lockdown.
Yeah.
That's I think the last time I physically saw you at Mines and Money doing an interview, or was it one-to-one? Or both?
Might have been 1-to-1 2 years ago.
Might have been 1-to-1 2 years ago. Yeah. Anyway, appreciate you coming in.
All right. Thanks, Matthew. Take care, sir.